London, Reuters, world stocks hovered near one-month highs on Wednesday as an expected U.S. interest rate rise and risks of a fresh outbreak of trade tensions between China and the United States overshadowed a generally benign political and economic backdrop. Wall Street appeared set for a modestly firmer open, potentially building on the previous session's gains, which were fueled by buoyant mergers and acquisitions activity among media and telecoms firms. SPXIXIC.ESC1. European shares rose too as global company earnings have been revised up, according to Thomson Reuters I/B/E/S. However, assets such as Chinese stocks, European autos, and the Mexican peso are under pressure from the risk of protectionist measures from the United States, which is preparing to unveil more tariffs on $50 billion worth of Chinese goods. And the U.S. Federal Reserve, the European Central Bank and the Bank of Japan all hold policy meetings this week, with the Fed expected to announce its second rate rise of 2018. Equity markets are marking time and finding it difficult to make upward progress despite reasonably good economic data. Said Andrew Milligan, head of global strategy at Aberdeen Standard Investments. We are entering 3 days of important central bank decisions. Markets have pretty much priced what the banks will do, and it is clear we are in a monetary policy tightening cycle. These issues eroded slim gains made around Tuesday Euro trademark summit between U.S. President Donald Trump and North Korean leader Kim Jong-un. The meeting has soothed some geopolitical fears, as a joint statement pledged to work toward the denuclearization of the Korean Peninsula. MISI Euro trademark all-country share index was flat. MIWD 0.0000 plus, recovering slightly from deeper losses caused by a 0.5% fall in non-Japan Asian equities. MIUPJ 0.000 plus. European stocks too were 0.3% higher after a weak start, led by a 1.4% rise in the tech index. SX8P and an 80% leap in Dutch fintech firm ADYEN_W.AS, on its first day of trading. An index of auto stocks lagged, however, with gains of 0.2%. SXAP. Milligan downplayed the impact of U.S. trade measures on global commerce but noted a Euro-ETH direction of travel is not positive, which is why equities are not making as much progress and investor sentiment is not more positive. Investors see trade wars as the biggest market risk, a closely watched survey from Bank of America Merrill Lynch, BAML, showed. It showed investors bullish on equities but still holding high levels of cash in portfolios. A clear sign of wariness. In a reminder of the danger of trade disputes, shares in Chinese telecommunications giant ZTE Corp. 0763.HK, fell as much as 41.5%, wiping $3 billion off its market value, as it resumed trade after agreeing to pay up to $1.4 billion in penalties to the U.S. government. Its Shenzhen shares, 0.00063.SZ, fell by their 10% limit, dragging down mainland Chinese shares around 1%. CSI 300. The Mexican and Canadian currencies remained under pressure from trade war fears, the former hitting 16-month lows against the US dollar. CAD equals. Policy. Investors see central bank policy mistakes as the second biggest risk for markets, the BAML poll showed. Projections from the FED Euro trademark's March meeting suggest a benchmark rate of 2.1% at end of 2018. That implies a total of 3 rate rises this year. But some reckon 4 increases are possible. Euro-ETH focus is on how many times the Fed will raise rates this year and next and how much beyond the levels it considers as neutral to the economy, or what they call the longer run rates. Euro said Shuji Shirota, head of macroeconomic strategy group at HSBC Securities in Tokyo. As the Fed meeting approached, the dollar traded flat against a basket of currencies. DXY giving up some earlier gains but stayed near 3-week highs versus the yen. JPY equals. It firmed sharply against some emerging currencies. The Turkish lira fell 1% toward recent record lows. TRY equals. The euro eased off last week, a euro trademark S3-week high of $1.1840 but remained underpinned by expectations the ECB will mention plans to wind up its stimulus and even hint at the timing of its first interest rate rise when it meets on Thursday. However, Italian bond yields fell further, with 2-year yields down 14 bps to below 1% after EU Affairs Minister Paolo Savona, considered a Eurosceptic, said the euro was a euro or indispensable a euro. Such comments have soothed worries about Italy a euro trademark's euro membership, but analysts say the government a euro trademark's high spending plans could boost yields again once the relief rally ebbs. A euro or in the longer term, they need to do something different to bring the deficit under control, not just pay lip service toward the euro, a Eurocommerzbank strategist Christoph Rieger said. Britain's pound GBP equals D3 and bond yields slipped as data showing subdued inflation checked expectations for an interest rate rise this year.